Hey, good morning, traders. Today is Sunday morning, approximately 10 a.m. And I wanted to do a quick video here, not only because, number one, I did not do my weekly update on Friday as per usual. Didn't really see anything new on the charts that you needed to know about, other than one thing, which I will cover in this video. But now I am also starting to see positive signs from our altcoin space, showing me, many of these coins have reached their target down or their entry area. So showing me that the crypto market could do something I was not expecting, and that is specifically Bitcoin could reach the 36 to 40,000 mark before pulling back and retesting the neckline. So I was expecting a neckline retest and then move to 36 to 40,000. It's possible, and I've said this all along, that we don't get that retest first. And I'm going to show you some things that are showing me why this may not happen. All right, so let's just jump into the charts here. The first chart I have up here is KRE. This is our regional banks, and this is of supreme importance currently. All right, reason why, and I've posted several times statically about this chart. This marks the beginning of our secular bull market in 2009. And you can see we've always remained above this trend line since 2009, with the exception of COVID-19, of course. That is always exceptional data because that was an anomaly. So we generally throw that data out. But here we are today, and I posted on the day that we broke below that. That candle was trouble until, let's zoom in here. The next day we had more positive news that the regional banks were going to be helped, going to be assisted, which is to be expected, right? So here on Friday, we closed back above, just sitting on that trend line, but closed back above it. And that is very important, guys. What I did not want to see as another candle opening and closing before that, below that trend line, that would have signified that the banks are going to start to crumble and crash. And that is never a good sign for the market. Banks always lead the market. All right, so we already had the Fed guaranteed depositors. That was bullish for the markets. And despite what the Fed's doing, increasing interest rates, behind the scenes, they have their printers going, all right? And they have their printers going because they have guaranteed depositors. So what they're essentially doing is playing both sides of the fence, all right? So on one side, they're raising interest rates, making it look like they care about inflation. On the other side, they're printing money at never before seen rates in attempts to rescue these banks from failure. All right, so essentially what they're doing is not only crashing the US dollar, and that will begin to crash, but they're also making it very difficult for average investors, average homeowners, average businesses to get money. All right, so it's becoming doubly tough. Usually, you have a recession, a deflationary recession, or you have the problem of inflation killing the dollar. In this case, you have both difficulties taking place at the same time. Not only is the market growing more and more illiquid, meaning it's harder to get for lendees to get their hands on that loaned money, on cash, for starting businesses, for buying houses, whatever it be. but also at the same time, the value of our dollar is crashing because of behind the scenes, the Fed printing money to guarantee these banks their basically to rescue the banks. Okay, enough said on that. I just need you to understand contextually what is going on here. So the Fed is basically not going to allow, they're going to try not to allow these banks to fail. And that is where we came back above this psychological line of support. And now that we're back above it, I see that as a positive sign for the markets. All right. If the Fed rescues or guarantees these banks from failure, that means there's going to be even more printing. And all of this deflates the dollar, but is priced in. Perceptually, it looks like an increase in the market because it takes more dollars to buy a thing, right? So that increase in the amount of dollars that it takes to buy a thing is also going to be priced into the market. It's going to take more dollars to buy Apple. It's going to take more dollars to buy regional banks. It's going to take more dollars to buy any of these stocks or shares that you will own, and therefore that will increase or boost the market. So this is a very important chart, and we must keep our eyes on this. All right, since 2009, we have remained above and still remain above this red line, with the exception of that one day on Thursday when Pac West and some of the other regional banks were crashing into the ground. Okay, so what is the dollar doing? We have to cover this, guys. This is all relevant to our altcoin space. And then I'm going to get into a bit of why I'm starting to change my mind about a pullback in Bitcoin to our neckline. All right, so the dollar here, I wanted it to test the 50 day. We almost did that on Tuesday. All right, we peaked above, we wicked above this level of resistance, and then we have come back down. So now I don't know that we're going to go up there and test that 50-day moving average. All right, now we're going to, I think, hammer away at this neckline, which actually comes all the way from 1984 and is a neckline for the current head and shoulders pattern. All right, we crash below this neckline, it's bye-bye dollar. All right, so this is also signifying moves that the Fed will take into the future to rescue banks, to pause, to pivot. This chart is telling us ahead of time. We don't have to wait for that press conference. We don't have to wait for the FOMC. We look at the charts. The charts tell us what is going to happen. VIX has come way down again. We are still in this bullish triangle, but we are at levels that indicate fear is residing, fear is leaving the market, and that is also a good sign for our stock markets. All right, so I mentioned on KRE this line that comes from 2009. I'm going to show you that correlates with the data that I am seeing on the dollar. All right, so we have on the dollar, we have remained below this line since 2009, indicating a secular bull run. All right, so since 2009, and the S&P 500, I've got the SPY chart here, we have remained above this line since 2009. All right, so this is our secular bull market, no question about it. We are still in a secular bull market, and I wanted to point that out because it's very important to see you don't get too bearish here. I still believe we are going to have our blow off top. All right, and you know, I've talked about this incessantly for the past year, basically. Now, again, this chart has not been updated. I was hoping we'd come back down here and test that 200-day. I'm not sure that's going to happen. Looks like we are just going to touch and test that 50-day, and we're moving back up again, guys. So a blow off top eventually will break to the upside. of this channel that I have drawn here. It's just a hypothesized channel that I have drawn the bottom of. I was thinking we might come back down and test, and somewhere down here would form a bottom. But the market right now is so bullish that I don't know that that's going to happen. The market is, why is the market so bullish? Again, because the market is counting on the Fed to take care of things. All right, so they've already guaranteed banks from failure by guaranteeing depositors. They're already printing. That's a signal of more inflation or a weaker dollar, which takes more of to buy a thing, right? And the market is also expecting a Fed pause or possibly pivot into the future. I'm more on the lines that if anything happens, it will just be a pause. Either way, that is hugely bullish for the market. All right. And that brings us to our crypto state. All right. And here we are. This is the expected neckline retest that I've been talking about for now five weeks. But we have formed, you can see this red triangle, that or this red trend line from January of this year. We only broke down below it very quickly here in March and then came back above it. And now have been using it as support. Additionally, I've drawn this line. I drew this several weeks ago, and it has remained a line of resistance. All right. So no new pivot highs, with the exception, and here's one of the things that I am pointing out to you, just so you know why I am starting to be persuaded that we may not test this neckline first. All right, and that was this candle here that I just circled on Friday, made a new pivot high. All right, so let me get rid of that dot here. So previous candle was here on Thursday, and our close high was 29,484, and then here on Friday we closed at 29,554. Only a difference of $100, but that is a new pivot high, guys. So signifying that trends could change here. Of course, I've made the assertion that I will not be entering into the market until one of these two things happens. We come up here, close and confirm in this green area. We closed this candle on Friday. We did not confirm because you can see the next candle was opened and closed below that green area. All right, so no trades. All right, but if we get up into that green area, close and then confirm, a confirmation candle indicates when another candle opens and closes above basically this descending black trend line or in this green area there, that is indicating more and more to me that we are becoming, we're not going to come back down and test this neckline. In that case, I start to look for trade entries. The other reason I would look for trade entries is if we do break below this red line, or basically essentially the 50-day moving average, and then we crash down and come down and retest that neckline. That's also where I start to look for trade entries. So those two things must occur, one or the other, before I really start to look for trade entries. Now, there are a few altcoins, and I'm going to cover that here now, that I see have entered or have met their target down, and re-entries are looking promising in this area. All right, so let's get down there. First, let's just jump to the Bitcoin dominance chart, see what it's doing. Again, still forming that head and shoulders pattern. I'm not going to draw it out here for sake of time. And total 2, we're going to cover that. That's all the altcoins. We went into resistance on Friday as well when Bitcoin spiked up, and then did not confirm any move above that resistance again. Came back down. All right, so we're this blue ascending trend line. Basically, you can consider this area here, you know, and over here. You can consider all of that a touch. I mean, it's just above, but that's close enough in my book. In fact, that trend line may not even be as accurate. Yeah, we could draw it right there because there was no close and confirm there. So that could be a trend line. We could have touched that. Again, another indicator that we could go bullish here before coming down to retest. I said possibly testing this bottom trend line or the 200-day. That has not happened on the total market cap. All right. So what's Ethereum doing? Ethereum is showing us, again, same thing, mixed signals here. It doesn't look like we want to come back down and test this neckline of this inverse head and shoulders pattern. But I'm still not persuaded that we're not going to do that. I'm just saying some of the altcoins which we're now going to look at are indicating that we have reached our target down and good entry area. So I drew this entry area quite a while ago, and look at ARB, came all the way down to 121 and is now starting to be bullish again. All right, so what I wanted to see is a lot of accumulation in this general area. All right, down here. All right, so we need a few more candles before it really entices me to make an entry. But if you're a high risk trader, this is not a bad place to start, at least dollar cost averaging in. And I may actually even do that, even though my overall scenario is not met, where Bitcoin beats that resistance at 30,500 or touches the neckline down there at 26,300. It's not a bad idea to just dip your toes in the water just in case, right? So ARB is one of those coins that has reached the target down. Okay, what are we at? 16 minutes here. Doing good so far. Matic, all right, finally lost support here, this trend line, and I would say 87 cents would be a good target down for that one. But we're getting close, right? Doggy coin, I don't know if it will actually get down here to 7 cents, but that is where I was looking to enter that one. All right, polka dot below the 200-day. Nothing really interesting here. Again, entry area would be $5.30, $5.12. That's what I said in the last video. I'm sticking with that for now. XRP 42 cents, and look at this wick down, guys. On Wednesday, that was right here. Almost take that 42 cents. If you were on top of it, you would have entered there, because we got close to the 42 cents. It doesn't have to be exact, guys, but that was a very close tag of the 42 cents. Still think we could hit 42 cents, and to enter these trades, I'd rather see accumulation. A couple candles in a row on the daily, showing me that we're building strong support there and going to go back up. So again, I'm patient on this one. I'll wait and see if we can still take that 42 cents area. LTC, I wanted to see us take that 200-day. Look at this, guys. That's another positive sign. All right, LTC taking the 200-day moving average. 18 minutes. Let's do a few more here. Solana, I wanted to see us retest down there. Solana is pretty bullish. I'm not sure it's going to do that. I've said that all along. Algo has reached almost the target down of 16.4 cents. We're getting close again, guys. So there's another one showing signs that we've reached or are nearing our target down area. You've got head and shoulders pattern on ADA there, so that could go below the 200-day again. It could, it's not necessarily. Ape has reached its target down at $3. I said that this was going to go to $3.54, and it has. It's right there right now. So let's move this one up here with R, because those are two that I'm pretty interested in at this point. Audio. Getting there, 200 days, what I'm expecting. Jasmy, okay, here's another one. I'll end on Jasmy because this is what you all like to trade. Jasmy has broken above this neckline here. See this? This is a neckline for two patterns, actually. Actually, they're both the same. Three patterns I see right now. An inverse head and shoulders here. See that? All right. Let me get on my pen and mark these. And we'll do it quickly because we're drawing near to the end of the video, and I'm just going to go ahead and say bye to TradingView people right now and end this. So the neckline has been broken up. We're going to a penny, guys. That is the conclusion on Jasmine. All right, and here's another pattern here for the rest of you guys. A little bit of a cup and handle. This could be considered the handle there. Again, this is these trend lines were important. We broke into the upside. It has now already come back down and retested. So a penny is in the cards. And this is another small signal that crypto market could be starting to turn positive. And on the Bitcoin chart, we may just not come back down and retest that neckline. We're going to have to watch closely. We've got a couple more days here to break out of this triangle to show us whether we're going to go up or down. So we need to see what the market tells us before I really start to get aggressive on these trades. But that's what it's looking like, guys. And so I hope that video helps you understand, what exactly Studamus is waiting for. Some of these altcoins, like I said, they're getting very interesting. They're getting very attractive. They've reached their target down, and I may start to dip my toes in the water. But I really want to see specifically Bitcoin show us, are we going to continue this bull run up to our larger target here, 36,000 to 40,000, or are we going to test this neckline before we go there? In my opinion, I think it's more bullish that we test the neckline. We go down to 25,200 or 25,200 before we go up, but we may just hit that 36 to 40,000 before we come back down and test. As long as we can retest that neckline sometime in the future, I am hugely bullish on Bitcoin at that point, and I believe our bottom is in at 15,700. But if one of those two things, we don't retest that neckline soon, then something in the future is telling me we'll go back down and retest our lows for the year. Actually, for last year, right? When did we hit that? Yeah. So starting to become more and more bullish, but those are the things I'm looking at. All right. Enough of the droning on. Hope this video was helpful, and I'll talk to you in the next one. Peace, y'all.